Hello and welcome to my channel, where I share tips and tricks on personal finance and investing. Today, I'm going to clear up a common misconception that many investors have. What is the difference between mutual fund and SIP? Many people think that mutual fund and SIP are two different types of investments, but that's not true. A mutual fund is an investment product, while a SIP is an investment mode. Let me explain what that means. A mutual fund is a pool of money collected from many investors and invested in various securities such as stocks, bonds, gold, etc., by a professional fund manager. The fund manager follows a certain strategy and objective while selecting the securities for the portfolio. For example, some mutual funds may focus on large-cap companies, while others may invest in small-cap or mid-cap companies. Some mutual funds may track a certain index, such as the Nifty 50 or the Sensex, while others may invest across different sectors and themes. A mutual fund offers diversification, professional management, liquidity, transparency, and convenience to investors. You can buy or sell mutual fund units at any time based on their net asset value or NAV, which is calculated at the end of each trading day. You can also choose from different types of mutual funds based on your risk profile and investment objective. For example, you can invest in equity funds for long-term growth, debt funds for regular income, hybrid funds for balanced returns, etc. A SIP or a systematic investment plan is a way of investing in a mutual fund scheme of your choice at regular intervals, such as weekly, monthly, or quarterly. For example, you can start a SIP of 1,000 rupees per month in an equity mutual fund for 5 years. The main advantage of a SIP is that it helps you save regularly and benefit from the power of compounding. Compounding means that your money grows faster as the returns are reinvested along with the principal amount. For example, if you invest 1,000 rupees per month for 5 years at an annual return of 15%, you will end up with 98,765 rupees at the end of the period. Another benefit of a SIP is that it helps you reduce the risk of market fluctuations by averaging out the cost of your investments. This is because you buy more units when the market is low and fewer units when the market is high. This way, you lower your average cost per unit over time. This strategy is known as dollar cost averaging or DCA. To start a SIP, you need to choose a mutual fund scheme that suits your risk profile and investment objective. You can compare different schemes based on their past performance, ratings, expense ratio, portfolio composition, etc. You can also use online tools like calculators and planners to estimate how much you need to invest and for how long to achieve your desired goal. Once you have selected a scheme, you need to fill up an application form and provide your bank details for the automatic transfer of funds. You can also choose the date and frequency of your SIP installments. You can start a SIP with as low as 500 rupees per month and increase or decrease it as per your convenience. So now you know that mutual fund and SIP are not two different types of investments, but rather two different ways of investing in the same product. The question then arises, which one should you choose? The answer depends on your goals, risk appetite, and investment horizon. If you have a lump sum amount to invest and you are confident about timing the market movements, you can opt for a one-time investment in a mutual fund scheme. However, if you want to save regularly and avoid timing the market fluctuations, you can opt for a SIP in a mutual fund scheme. Both methods have their pros and cons, but generally speaking, SIPs are more suitable for beginners and long-term investors who want to build wealth gradually and steadily over time. I hope this video has cleared your doubts about mutual fund versus SIP and helped you decide which one is better for you. If you liked this video, please give us a like and don't forget to subscribe and share this video. Thank you. Have a nice day.